muting your.
Unmute yourself out, Curly. Okay.
There we go.
All right. I'm gonna step away for a quick second.
All right, I got it. Let's see here. We're just going to allow everyone a few more moments to come in and then we'll get started. We're going to have a hard stop in exactly an hour. We're going to start in exactly 2 minutes, everybody. So just give us a moment.
All right, I'm back.
All right. I'm just going to give them 1 more minute to get everybody in, or as many people as we possibly can before we get started. All right, everybody. So we're going to go ahead and get started. First and foremost, my name is Kayla. I have Ray on with me as well. We're the two admins inside of the Wealth Squad. And before we get started, we do have to obviously give you guys a disclaimer. We are not financial advisors, and this is in no way financial or trading advice. We're simply sharing options trading strategies that we use and have been successful with in the stock market. And this presentation is for educational purposes only. There are significant financial involved with trading, and we are not responsible for your losses in the market should you decide to utilize the information and or strategies discussed within this presentation. And by choosing to proceed, you are acknowledging your understanding of this disclaimer. All right. So if everybody can hear me, I want to make sure we'll just place a 1 in the chat if you can hear me pretty well. Okay. So we're going to talk about fundamental analysis as well as support and resistance and how you can use support and resistance as buying and selling opportunities. But the first thing we're going to do is discuss fundamental analysis, and it's pretty simple. I don't know who's annotating on my screen. All right, so first and foremost, what you want to look for with companies is simple things like, are the company making any new products? Are they growing? Do people like the things that they're offering? Is the company undervalued or overvalued? Right now, a company that is showing to be undervalued, believe it or not, is Apple. People are not realizing that Apple is the #1 innovator. However, their stock prices are extremely low right now, and we're just now seeing Apple start to move. What is the current catalyst for the company? Do they have anything that they're about to release? Are they creating any new product? What is the buzz around that company right now? Of course, are they innovative, like I said about Apple? And would you personally buy shares with the company? If you wouldn't shop with the company, I wouldn't recommend investing in that particular company. You have to believe in where you're placing your money. You also want to look at historical data. You want to see what they did in the past. Are they increasing their revenue year over year? What is the current and past news about their company? What do the charts look like? What's the current outlook on the company? Are they creating anything new? Are they like, Tesla or the EV stocks right now? Are they doing anything that's going to change the direction of where the future is going? And what are the current analyst price targets? I'm not sure if any of you have seen in the Discord where some of us may post any price upgrades for that particular company if they've been downgraded. These things are essential when it comes to fundamental analysis. And it's very simple. You just want to make sure that there's a positive outlook on where the company is going. All right, everybody got that? Put a 1 in the chat if that makes sense to you. If you have any questions, we'll definitely answer it towards the end. All right. So where you can go to view some of these things, and let me just move this down just a little bit. So obviously you can go to Yahoo Finance, which is one of my favorites because on Yahoo Finance, it updates pretty regularly and in real time in most cases. You're able to see the current stock price, how they moved after hours. You're able to see, what people were bidding at, what people were asking at. You're able to see the volume, the 52-week range for how that company started within the beginning of the 52-week mark, and then where they ended at the 52-week mark. You're able to see the earnings dates, the market caps, a lot of good essential information you can find inside of Yahoo Finance. And so that's a really good place to go when you're trying to get fundamental information about the
meditating and praying, Kat.
I'm sorry, can you guys mute your mics, please? Thank you so much. Okay. And if all else fails, you can always just go to Google and look for, different news catalysts about the stock. Oh my God, someone is annotating on my screen. Whoever's doing that, could you please stop? So for example, if you just Google a company, you can see all of the stories that, are out about that particular company. Right now, you see here, this is basically doing fundamental research on the company. Just go to Google, type the company in, and just see, the growth forecast here. You can see things where people are talking about shorting Tesla and things like that. So this is a very good resource when it comes to looking into that particular fundamentals for that stock. All right. So let me see if I can just get all of this off my screen clear. All right, cool. All right. So now let's talk about support and resistance. Okay. So support or demand is the price at which there is a demand or buyers for a particular stock. Support levels provide an opportunity to purchase a stock, and a broken support level can be used to stop a trader out of a position. So obviously, when it comes to support, it's basically considered to be the floor of where that particular price action is going to hit and bounce off of. And obviously, if you see the stock price bouncing off or the candlesticks bouncing off of the support line, more than one time, I actually say 3 times, that's a good bullish indicator for you. And a lot of people like to ask, how do you find your price targets or buy signals? Well, you would be looking at support and resistance. They are very, very essential because if you're looking to place a call, then you obviously will want to make sure that the price action or candlesticks are bouncing off of the support. It's basically reacting to the support line and trending upwards. Your resistance, of course, is a sell signal. So if you're seeing a stock constantly hitting this particular price point and always rejecting it, that may be an indicator that you may want to short or sell when it comes to placing a put. So then we have resistance. Resistance or supply is the price at which there is a supply or sellers for a stock. Resistance level provide an opportunity to sell or short a stock. A broken resistance level can be used to purchase a stock or to cover a short position. So normally when I'm looking into doing calls, if I see a company can break through a resistance point, sometimes I like to enter into a call position 15 cents above the breakout. And that's just a personal thing. Traders are going to have their preference in how they enter into any calls or puts, but that's something that I do. I look for a company to break through a resistance point, and I enter 15 cents above that breakout. And when it comes to puts, it's the same thing, 15 cents below the breakout. Now, support and resistance are areas where price has reacted to in the past and can potentially react to again in the future. Trade opportunities arise within support and resistance. Support or a support level refers to the price level that an asset does not fall below for a specific period of time. Resistance or a resistance level is the price that an asset will meet pressure on its way up by the emergence of a growing number of sellers who wish to sell at that particular price. The more price action to bounce off of a support level, or the more price action to reject away from resistance, and let me just move this down just a little bit. The more taps off of the support or resistance, the stronger that it is. So what you will want to do is consider support as being the floor. It can either be the floor of an old home or weaker support, or with weaker support rather, or a new home with strong support. Now, if you were to throw in a basketball and you were to bounce it off of a weak level of support a few times in an old home, eventually it would break through the floor. In a newer home, it may take a lot more hits before it can break through because it's a stronger support level. Consider resistance as being the ceiling. It can either be the ceiling of an old home with weaker resistance or a new home with stronger resistance. Now, if you were to throw in a basketball and if you were to bounce it off of a weak level of resistance a few times in an old home, eventually it would break through resistance. So in a newer home, it may take a lot more hits before it can break through because it is a stronger level of resistance. So basically, when you tie that into support and resistance when looking at price action, the more times the stock is to hit a resistance level, the stronger that it will eventually become. And then eventually it would break through that. And the same thing for support. The more times that it taps off of a support line, chances are that it may actually either reject that support line and go that support level, and it will be a buying opportunity for you to do calls, or it would actually break through that support, and that would be a buying opportunity for you to do puts. Now, support and resistance. To find support and resistance levels easily, you would just look for extreme swing highs. So right here, you see that this is an extreme swing high. And you would look for extreme swing lows. For resistance, you would want 3 or more rejections. The more rejections, the better. So for example, if you look over here, you see it's rejecting 1, 2, 3, 4 times. And then this would basically be a buying opportunity for puts because it's rejecting this rejection line. And then the level should be obvious and jump right out at you immediately when you're looking at a chart. So you can see that this extreme swing low and this extreme swing high, if you and another trader were to look at this chart, more than likely you would be able to identify these same points together. And that's what you would want to look for, because that is going to give you an overall view of how most traders are looking for buying opportunities and sell opportunities. And they should also be able to serve as both support as well as resistance. So right here, you can see that this is a resistance, but if you were to take this line straight across, you would see here, it's also a support line. You would see here, it would be a support line as well. So it needs to both serve as support as well as resistance. And it also needs to have been recently respected. All right, so I'm going to open this point up to Ray. We're not going to do questions just yet. I want to pull up TradingView, and Ray is going to take over to just show us how to chart in TradingView, or maybe even stock charts. Which one do you have up, Ray?
I got a TradingView.
Okay.
Yep. All right. So share my screen. All right. So right now I got Apple pulled up. So right now we're on a daily chart. So how I like to usually use like a top-down approach. Let me block this one off. All right, there we go. Full screen of chart. All right, yeah, I like to use like a top-down approach whenever I'm doing my support and resistance. Usually I start off on a weekly, but the easiest way to look at support and find support is where you see multiple bounces. Like in this area, it's some support, as you can see right here. It broke through here, came back down, and then it bounced off of it twice on these 2 points. So if I'm plotting it, what I would do is I go over here. So on TradingView, you go over here to this tool, and then you come down to where a horizontal line is. And then you would just come here and click. And so that's how you would plot your support on TradingView. As far as like using a tool. Or I think you can make this like a dotted line. But oh well, we'll skip past that. So all you want to do basically is like she was saying, support. Once something is resistance, it then becomes support. So that's what you want to see. You want to see something break through here because obviously there was some resistance right here. But when you look at resistance or support, it's more so of a zone than an actual set point. So this probably was a resistance zone and then it gapped up above it, right? So you didn't actually get to see it except for right here where there was some consolidation of seeing. I don't know why they. Okay, can you mute? All right. So whenever you see consolidation like at this point, that's how you know there's some overhead resistance, especially when you start to see these shadows or wicks, as people would call them. That's how you know that there's some resistance, overhead resistance, or selling pressure that's going to come in. So that's how you know this would be a good area of resistance that became support. But like I said, it's going to be more so of a zone than an actual set point. So sometimes when you're looking for resistance and support, and you see sometimes when you plot a line across, how sometimes it'll go through certain full real bodies or whatnot. It's more so because it's more so of a zone, if that makes sense. Does everybody get that? Put a one in the chat if you like understand the explanation or not.
Yeah.
All right, bet. So as you continue to go, I mean, well, we could sit right here. As you can see right here, if we wanted to plot resistance, we can go ahead and plot resistance right here. Why could you see 3 touches right here? So automatically go over here, get my horizontal tool, and then boom,
Mhm.
plot the resistance. And I can move it actually up just a little bit. Because like I said, it's not always going to touch. You kind of want to get the area where it does touch. But for the most part, just get in your mind that it's a zone. It's not a set point. It's not a set price point. It's like a zone. And that zone could be a whole dollar. It could be 50 cents. It could be whatever. So always think about that. I'm using TradingView. That's the chart software, as well as, like I said, let me go back over it. You go over here to this tool. Can y'all see where my mouse is at? And you click on that. You click this arrow to the side, and then that's how you get the horizontal line. Or you can use like an arrow, whatever you feel more comfortable in using. That's what you use. I just like to use the horizontal line. And so, like, the other thing I think somebody was asking before was like, or saying like, whenever you use this, and like, let's say we drop down to like the 4 hour, obviously the line's still gonna be there. So when you start plotting support and resistance on here, you would just use a different color. And like how you would do that, let me see if I can find some support. All right, so I would look at this as support. So like here on Apple, I would consider this support because it bounced off right here. It went below it, then it acted as resistance, and then it gapped up above what I would deem as the support slash resistance line. Because you got to remember, resistance becomes support, and then support, if it breaks below it, can become resistance at that point.
Mhm.
So how you would change the color, come here, plot, and then you would go right click, go to settings, look at the line, and then change the color. So like let's say you wanted blue to be your daily, the 4 hour to be whatever color that you want it to be. I say this is probably pink or something like that, red, whatever. And then that's how you can differentiate your colors. So that way, when you keep dropping in time frames, you're not getting confused on where this support resistance line came from. You can always keep up with it via color. But overall, that's how you apply support. You would just look to see where it's bouncing off of, or where price is kind of consolidating at. And then you start to see like the large, it wouldn't be large sometimes, but you start to see more shadows slash wicks when you get to an area of resistance, because you'll see that it doesn't really want to touch that area. So like here you start to see a little bit of a wick. Here you start to see a little bit of a wick. Here you see it went up and touched it, and then it came back down. So that's kind of like how you can tell when you're starting to get closer to resistance. It's going to start to be wicks and shadows, as people call them. So let me see what this chat is saying. Oh, that's K answering questions. So far, do y'all get the gist of support and resistance? It's for the most part simple. So if you understand it, just put a one in the chat. If you want me to go over it more, just just say, hey, this is where I'm not getting it at.
Do you mind if I say something really quick, Ray?
You said what? I couldn't hear you.
Um, so you also want to make sure that it's recently respected. So one key thing that Ray did that I want to point out, yeah, give me a support line right there where you are.
Where I'm at?
Yeah, like give me a support, you up a
Oh
little
yeah, I got you.
line right there. Okay, so this right here, obviously, it would have been a resistance point. If you were to scroll all the way over to the left, you will see that there is price action or the candlesticks that actually rejected that line quite a few times. But if you notice, when he drew that particular support line, he drew it more closer to current time frame. But he was able to scroll over to the left, and you'll see that that history still remains the same. It's still respecting that particular resistance point, and it's even respecting it in history or historically as a support level as well as a point. So you also want to make sure that it's something that's respected if you were to go back and look at history, unless it's basically a new high of day or something like that, or a new low of day. But this right here is a great example of showing you how your lines of support and resistance will be respected, even in previous time frames.
Right. You said what?
I said
Kind of
hope.
went out.
I said hopefully that makes sense.
Okay, yeah. If that makes sense, put a one in chat. If not, hold on. It sounds as if there's a lot of exact signs all the time. Even though you sent it, I don't know if you meant to send it on purpose directly. Um, Brandon's iPhone, I guess that's what it is. He was, or she. I'm thinking Brandon is guy. All right. So, anyways, um, there was like, it sounds like it's a lot of interpretation, not necessarily an exact science. Is that the accurate thinking? When it comes to this, there's not no exact science. One way of looking at it, if you look up the word fractal, a lot of these stocks you'll see they have fractal points. What a fractal is it's like a snowflake. Every snowflake is different, but they look the same. And so that's what's going on here. Like the support and resistance isn't going to always look the same. It isn't going to always be the same looking or the same criteria on a case-to-case basis. Like you want to see the bounces, but sometimes, especially on lower time frames, that support resistance might not be a main support or resistance. It might be a just a minor. Like every support and resistance that you draw isn't going to be a major one. That's why you should just look at the ones that's respected the most and then go with that. You know what I'm saying? It isn't going to be an exact science because how we all look at it and draw it may be a little bit different. Some people may start on at the end of a full body. Some people want to get all the wicks. Like it's just preference. But like that's why I said it's more so of a zone than an actual just a straight line or a straight price point. Like this red line, it says that where we drew the support at was 126.39. That doesn't mean when it crosses above it or it hits exactly on 126.39, it's gonna bounce off of it. It's more so of a zone.
Yeah.
So that's the main thing.
And that's another reason why I want to make sure that if you and another trader were to look at it, your eyes would at least go to that same zone. Like price point, but your eyes need to at least be able to be drawn to an exact zone if another trader was to be sitting there with you. Because a lot of people are going to be looking for a stock to break above or break below, just depending on if you're doing calls or puts. A lot of traders are going to be looking for those same zones as a buy or sell signal. So you at least want to make sure that you're in that zone.
Let's see. How far back do you need to? Well, when it comes to how far back you need to go to anticipate the future growth, I mean, because all of it is really just anticipating. Um, you would want to look at like a larger time frame, like look at the weekly, look at the monthly, see what the 52-week high is, see what the previous high, because even though it might be a 52-week high, it might have been a previous high before that 52 weeks. So I think 52 weeks is just like the past year. What was the high? Because obviously the virus done beat down some stocks. Some made it back to their 52 weeks. Some people didn't make it to their all-time highs, actually the term. So you want to see what the all-time high is, see what the fundamentals is, see what the companies talk about, see what the analyst price targets are to kind of try to anticipate the future growth. Mario, let me see what other questions is. Um, Apple isn't necessarily going to fluctuate in that 126, 140 area. I mean, you can say that it can be a channel that it trades sideways at, but at some point it can actually break through. You know what I'm saying? So it isn't always going to be in there ranging.
Yeah.
It's either going to break to the top or break to the bottom at some point.
And
So
fundamentals come in at too. You know, like you have to also keep that there's two parts of it. There's a fundamental side to it and there's a technical side to it. So Apple staying within that range, it may, range for a little while, but the more that they create new things and put new things out, they're going to continue to make new highs. So don't always think that they're going to be stuck within that particular range.
and as far as like how you find the next resistance, it just comes down to when it breaks through it, if it goes on a little bit of a run, wherever it stops at would be like the next resistance. Like you won't know until that resistance actually is gotten to and respected. So you can't just be like,
Except for $100 something. Right,
How much?
so you can,
Ray, unmute yourself. Thank you.
yeah, I saw it. Um, so that's the only way to tell. You can't just, guess the future. I mean, you can probably try to guess it, but I don't know the criteria of what it is. I'm not really trying to guess. Yes, you can try to use fibs or pivot points, if that's what you're good at and want to use, you can try using that.
For true, you can use that. Like one good thing to do is to see like when a company normally goes on a run, how much does it normally run? Like you might say, and this is just hypothetical, but let's just say Apple was a stock that moves $5 in a week. You might want to use that, maybe average down a little bit and say, okay, well, this is what Apple can do, and you can use that as a gauge, but not as a Bible, if that makes sense.
Kaylee, do you use the 1 minute, right? You get crazy sometimes to go down that far, don't you?
I use the 1 minute. Yes, I do. I don't recommend it to everyone because it will drive you crazy, but I am in love with the 15-minute chart. And really the charts that I look at just depends on my trading plan, like how long I'm expecting to hold a particular stock. So if I'm looking to hold a stock for a month, I might start off looking at the monthly chart just to see what I'm getting myself into. And then I'm going to scale down to lower time frames like the weekly chart and then the daily chart. If I'm looking to day trade, I might look at maybe, some people look at the 4 hour, just depending on how long you want to hold within a day. You may want to start off with a larger time frame and then scale down to maybe the 1 hour, scale down to, the 15-minute, the 5-minute. And if you're crazy like me, you might want to look at the 1 minute. It just depends on how you're holding that particular stock. If you're looking to hold it for a year, look at the year to see what you're getting yourself into and then scale down to the monthly, the weekly. That's how you trade based on your intentions of holding that stock.
Exactly. And Fibonacci is basically levels. Is a guy named Fibonacci came up with it that certain ratios are seen over and over, and like I think the golden ratio is like 0.681 or whatever. But um I think to access Fibonacci is maybe it's over here. Yeah, like you can use this one. Well, Fibonacci retracement is like the main one, but I forget if you draw it from the top down to the bottom or whatever. Like that's how you would use your Fibonacci. Um, but I forget how you exactly draw it. So don't go based off me. I know it's in the and if market facts and resources, if you go there, I put together a playlist and it shows you how to draw the Fibonacci. I don't really use Fibonacci too much right now.
And I,
I might start back using it.
I don't use fibs either. A lot of this stuff is trader preference. You know, there are some people who are just momentum traders. There are some people who are day traders. There are some people who do fibs. There are some people who do supply and demand trading. So we don't know everything because that may not be our trading style. We stick with what we know and what has helped us to be successful. Now you can always, branch off and learn these things, but not everyone you come across is going to have the same trading style.
Um, so let me see what somebody was saying. Can't you yes, you can use volume. But volume isn't necessarily show like support or resistance. It can like in certain areas, because like large volume spikes tend to be from institutionals or whales, people large enough to buy enough to make the volume spike like that. Retail traders don't really cause large spikes in volume. It's usually like institution trading or whales. Um, can you talk about the earnings effect if I could? Earnings is like Russian roulette. You don't know what you're getting with earnings. A company could report good earnings and it still fall. It can report bad earnings and probably jump. Like that is like Russian roulette right about now. I don't um
Can,
earnings is a guessing game.
can I go
If
into that a little bit too?
yeah, go ahead, go ahead, go ahead.
When it comes to earnings, a lot of um, more tenured traders would say it is a gamble, and the reason why is because sometimes the earnings run up could already be factored into the contract. Sometimes your earnings run up may happen 2 weeks, maybe a week before. Sometimes it may even be a delayed run up. I've seen companies that have reported really, really good earnings, fall around earnings, and then maybe 2 or 3 weeks later, they run completely up. So when you're doing earnings, you really don't know exactly what direction that it's going to go, even if they report good earnings. And then another thing is a lot of times, or not a lot of times, I've seen traders position themselves into contracts in expectations of earnings being good. And the company will go online and say they switched the earnings date. And so now
Yeah,
you're in a contract that could potentially fall.
exactly. But as far as like a strategy like using support and resistance is once you see that the support is established, it isn't gonna always come back down and touch support as you can see right here. And this is really making some lower highs. I mean lower lows, I'm tripping. Lower lows. Because right here, this is lower than right here. This is lower. I mean, this is higher lows, bro. I'm tripping. I'm getting that all mixed up. A lot of times when you want to like see bullish nature, you want to see like higher highs, lower. Kayla, am I saying it? My
The
words getting
I'm
tripped
looking
up.
I'm looking at this chart and it's actually making higher lows because
Yeah.
look
Boom. That's what I want to see.
towards more recent price action, it's going up, but then it comes down a little bit lower, but not as low as it was previously. So it's making higher lows. So that is a bullish indicator. So
Right.
right now we're looking at, this is Apple. So Apple is showing to have a bullish trend on this particular 4 hour chart. It's a 4 hour chart. So keep that in mind. It's bullish on the 4 hour chart. So this again is going to be contingent on your intentions of holding that particular stock.
But before I answer Jay question, like so that's kind of like what you obviously want to see in a bullish market, but also like what you want to see is like playing like support and resistance. You can always see where it comes down and touch it, and then you expect it to come back up to resistance. You can try. to make a play when it comes down and starts to go back up, and try to anticipate that it's going to keep going up, and then buy you a call, look at the average true range, give yourself some time depending on the time frame that you're looking on, and you can just play, bouncing off support going back up to resistance.
Right.
So if you would have bought here all the way back up to here, I don't know how much you would have got, but that's 107 to 138. You know what I'm saying? So that would have been a good play. So that's how you can use support and resistance.
Mhm.
But the question Jay was asking me, dang, where did the chat thing go, Majigger? Here we go. Boom, chat. Um, Jay was saying that I know you looked at my playlist. Sometimes it gets overwhelmed. Many traders you dip. I would just say start off with like MACD and RSI and support and resistance. Just go from there. And then once you figure that you don't like it or whatnot, go on to the next thing. Or you can start with like Bollinger Bands and just volume and support and resistance. Like you just got to see which indicator that you get right. So it might cause you to look at a couple of different ones, a couple of different videos and strategies, but you got to see which one that you can see over and over and over and over that makes sense to you. If the indicator's too hard for you, then you need to find another one. And that's just like the best way you can come down to seeing what works for you. Because you want to keep it simple. You don't want to have too many indicators on your screen unless it go with what you're working with. And at that point, you'll be more intermediate. You wouldn't be a beginner once you realize that. But it's just basically about seeing which indicator that you know, like the back of your hand, that you get. I wouldn't say right because I mean you're not going to be 100% right. Nobody has a 100% win strategy, but you get right, on a consistent basis, and that would be where you can start building your strategy around. So that would be my advice. And also get you like, you know, um, a couple candlestick patterns that you would know, like maybe like a bull sash or bullish engulfing that you can use to play, what I'm saying, off of when it comes to like support. So that's what it just comes down to, finding a system that works for you, because you don't take every trade. You want to, I think Kayla, you got a great trading checklist. And it's just like seeing before you take a trade if it meets your criteria. You want to find a criteria that works and that's consistent for you, and you don't take trades unless you see that criteria.
Yeah, absolutely. So, I agree with Ray when it comes to like just testing the waters and starting out with the MACD, the RSI. One of my favorite indicators that I tell everyone is the Bollinger Bands, because I, am able to get really good buy and sell signals just by looking at that on a pretty naked chart. But someone asked me about what I meant about 3 taps off of a resistance line. So if you look at more recent price action, Ray I can't annotate on your screen, but anyways, closer to,
I think you could, but not the way I can. Like you can, like how somebody drew this blue mark on there. You can hit
I don't,
annotate at the top. Oops.
let me see if I
Oop.
can
Yeah, I'm drawing on my own thing. Clear.
the option for it on my screen for some reason. I saw it earlier, but either way, Ray, if you could go right where you see the green candlesticks closer towards more recent price action, right, where it's ranging and consolidating. So you have this red line right here, right? And so it consolidated just for a little bit. You see that right above, slightly above, Ray, if you could go just a little bit above, I'll tell you when to stop right here, right?
Mm-hmm.
So it consolidated within this range for just a little bit. But if you were to look and see where these red candlesticks touch this red line, I see one, I see two, a green one, I see a red one, I see quite a few taps off of this line, right? So basically what that would indicate to me, and I'm sorry, Ray, if you could draw a line right where above where it was consolidating so that they can
Right
see
here.
the range that I'm talking about. Thank you so much.
Oh, hold up. There we go.
So this stock is basically ranging right in between these two red lines. But if you see the price action or the candlesticks bouncing off of this bottom red line, you'll see that it tapped quite a few times. Now, one of the reasons why I say you want to have quite a few rejections off of those lines is because that's a good indicator that it may either break to the downside and you may be able to position yourself for puts, or you may see that it breaks above. Normally, what I would do while it's consolidating, I'm trying to see if it's biased to the upside or the downside. And for me, this looks more like it's biased to the upside. And then when I add in fundamentals with that and I know what Apple is actually doing, this might be an indicator for me to take that trade. But what I would want to do is I want to wait until it breaks through that top red line. And again, I normally would enter 15 cents above the breakout, right? But I can't say for sure that I would take this particular trade because it broke out, but I might want to wait just to confirm. So I might use that second or third candlestick to say, okay, it may, run up a little bit more. So I'm not, this one right here, I probably wouldn't have taken 15 cent above this breakout. I will wait only because of me knowing Apple, and hopefully this doesn't confuse you guys, but I know Apple hasn't been the same since their stock split. So I need more confirmation for Apple in order for me to enter an Apple trade. But if it were a different stock, I might take this trade 15 cents above the breakout. So hopefully that didn't confuse you guys. I'm trying to let you all know how your fundamentals are going to tie in with your technicals. And by me, again, knowing that Apple has been pretty crappy since they did their stock split, I might need a little bit more areas of confluence before I actually take this trade.
Exactly. You ain't I don't think we gave that out, but let me put it here. Another easy way to look at company fundamentals is like IBD.com. They give it to you, companies and stuff in a easier to understand manner. Was this the right one? Hold on, let me make sure I pulled up the right website because I use my phone, not my computer. IBD. Let me click on here. Yep. So you can use them as a good way to look at other companies and see the fundamentals and stuff like that. So this would be a good website. I'll drop it in the chat.
I'm getting questions about, and everyone, the Zoom will be posted for later. The checklist is in market facts and resources. I placed that in there for everyone. That's a room that everyone hates to go into. Market facts and resources. Just really quickly, again, your fundamentals are going to be, is the company growing? Are they making more money than they're spending? Do people like their products? Do you like their products? Would you shop with them? Those types of things are going to be your fundamentals. I'm laughing at Ike saying everyone hates to go there. And so these are what you would look at when it comes to fundamentals. Again, you guys, there is a ton of resources that I know myself and Ray have worked very hard to put into the community. And a lot of this knowledge is at your fingertips. Just simply go into market facts and resources. There's even, I put in there my trading book list that has a lot of books that you would have to pay for that are in there for free. So please, you guys.
I'm gonna answer this question, and you can quickly like explain this Bollinger Band real quick because it's a easy example, especially from the top with this red can.
Please stop whoever is doing that.
All right, so check this out. Braylon, you determine your stop loss. You can do it based off of levels, like a support resistance level. Well, actually, it'll be a support level. Well, if it breaks through resistance, then it'll be resistance level. But you can also determine it by percentage. There's a video in market fact and resources that I did on risk management. So if you want to set your risk to like you only want to lose 20-30% of your contract, it's in like market facts and resources. How I explain that. But yeah, Kayla, you can go ahead and explain the Bollinger Bands real quick because it's
Very,
like two good examples right
very,
there.
Bollinger Bands are very simple, especially for anyone who likes to just look at regular price action without all of the indicators on your chart. That middle line of the Bollinger Bands is going to track the 20-day exponential moving average. Hopefully I'm saying 20-day exponential and not simple. I have to double check that, but I know that it's a 20-day moving average in the middle. So I personally don't even use the 20-day anymore because I like to use the Bollinger Bands, and that midline does that. So basically, what the Bollinger Bands does for me, if I'm looking to enter a trade, I want something, if I'm going to do a call, I want something that's going to be at the bottom of the Bollinger Bands. If I see it's at the bottom of the Bollinger Bands, and I can also have another area of confluence that confirms this is a good entry for me, because you never want to just have one indicator, you want to have more than one to confirm. But if I see that, for example, there's, a stock at the bottom of the Bollinger Bands with a very low RSI, I might want to watch that stock and say, hey, I'm going to do calls. If I see something that is at the top of the Bollinger Bands that has a very high RSI, I might be preparing to position myself for some puts. So your Bollinger Bands is this very, very, very simple indicator to use. And when I say areas of confluence, no, does Bollinger Bands generate by itself? If you're meaning does it track or follow the price action, yes, it does. You just simply click the option to add the Bollinger Bands, and if you leave it on its default setting, it's going to track the 20-day, and it's
Let me do that real quick for them, okay, how they can add. So you would go here to add indicator,
Mhm.
then you type it in. It's sometimes people got like these other built-in ones, but you would want this third one.
Oh, and a quick money hack for those of you who don't want to actually buy, more premium versions to get multiple indicators, because I think TradingView only gives you, I believe, somewhere between 3 and 5 free indicators. You can actually go where Ray just went to, and there are people who put templates in there, and you just find a template that has everything that you want. There's a template in there that has the Bollinger Bands, the RSI, the MACD, the RVOL. You might just want to look for someone who has created a template already, because they'll put it in there for you to use for free. So you don't have to actually buy, unless you're looking for level 2 data, but you may not have to buy the chart.
As far as what Brandon said, nah, I don't. Well, maybe that'll work. I'll try that next time. I can't. I
Thank
don't
you,
think I've tried that.
Brandon Bell. Thank you.
Um,
Last name.
Keela, I guess she was saying that it was about volatility or the essence of the Bollinger Bands, not tracking prices.
So we're not tracking prices. I'm just simply showing you buy and sell indicators from the use of the Bollinger Bands.
And yes, we recommend Trading View. Stock charts, I haven't used stock charts, but I prefer Trading View because when it comes to like looking at patterns, looking at the candlesticks and all that stuff, it's more clearly seen. Like even like I use Thinkorswim TD Ameritrade to actually place my trades, but I don't like their charts. Like Trading View has the most appealing to my eye, charts, and it's easier to see things like patterns and stuff like that. Especially if you're into looking into that or looking at the candlesticks, it's easier to see it in Trading View. Like the way it's just drawn is simple and it's just quite beautiful to me. You know what I'm saying? So that's what I like to see. So it's just basically your preference, but Trading View to me is the best. And then also because like I think every software got it now, every trading software. Um you can have a Trading View free plan. I use the Pro plan, or is it Pro Plus? It's one of them. Anna, but like, oh, it's actually not right here. It would be over here. Like you can actually go see other people's like trading ideas. So like right here, you can see like if the same thing you're seeing is somebody else seeing, or you can see like how other people like the chart and all that other stuff, the different indicators that they use or whatever. So well, yeah, there you go. Pro Plus. That's the version I am using. Um, but yeah, you can look at other people trading ideas and stuff like that. I think maybe in Thinkorswim, TD Ameritrade, and Webull, they got that. But to me, it's less. claustrophobic for me to look at. Like all that stuff. I guess maybe because I looked at it on my phone, it'd be all bunched up, and I don't like that. So that's why I like, Trading View. I stand by it. You know what
The
I
red
mean?
line in the middle is the 20-day moving average.
You said what?
Someone asked about the midline of the Bollinger Band.
Oh yeah. I wonder.
Moving
I
average.
think maybe I could look at the settings. Let me see inputs. It's a deviation source, but yeah, it's a 20. It doesn't say here specify if it's a moving, simple moving or a exponential moving. But yes, a 20-day moving average.
Yeah. So if you're like trading on a longer time frame and you're someone who uses moving averages on your chart, then you may not want to put you may not want to put the 20-day on there because you just have two because again the Bollinger Bands follows that. Right. For real.
Huh? Oh man, got to answer questions and stuff. I bad, y'all got multitask.
Yeah. So we're getting ready to have a hard stop. I guess we have 8 minutes if you guys want to unmute yourselves and beat each other to the punch asking questions. Let's go at it. The exponential basically has more weight on the most recent price action. It's faster moving. The simple moving average is a slower moving average. That's how I sum it up into layman terms.
Got a quick question. Being that this is the Apple chart, I'm not sure how everybody could see, but I've been seeing like a little cup and handle. Is that something that you guys see as well?
Where do you see a cup and handle on what time frame?
Well, pretty much on that same 4 hour chart time frame. Actually, it's like a big cup and handle. So like pretty much from where Ray got it drawn out from the beginning
More
all the way to where you see exactly. There you go. From that first wick.
Yeah.
You see that cup and handle as well too, or
I see what you could consider a cup and handle, but the bottom is not rounded out. It's an ugly cup and handle, but I can see what you're getting at. Yeah, I can see.
Yeah, I see what he's talking about. You
Yeah.
have to wait for the rest of it to actually happen. But I isn't like I know it's the head and shoulders. They oftentimes reverse, but some of these patterns when you see it, a lot of times they have like a high reversing nature. They don't go the way they're supposed to go.
That
But
more that looks more like a cup and scandal to me, to be honest with you. I mean, obviously Apple is in an uptrend, but that cup and handle looks more cup and scandal to me.
But also, like when it comes to patterns and stuff, y'all be careful when you're looking at patterns because, like I said, it's a few of them. I can't remember which ones. Um, but they have like a high like reverse, and they don't always go the way they're supposed to be. So, like, you want to play the like most consistent patterns, which I think are like pennants and like bull flags or something like that. Um, they have a higher conversion rate. So also when you put your strategy together, think about that. And like also like with candlestick patterns, look for the candlestick patterns are like the most bullish or the most bearish, whichever way you want to play. If you're unbiased, you like to play bull, you like to ride it up and then ride it down. Look for the patterns and stuff that has a high conversion rate. You know what I'm saying? Not one that's right sometimes, just because it's a pattern. You want to put together the most optimal um tools in your tool belt that's gonna usually convert because you want a high probability rate, which would be a high win rate for you. So when you're putting your strategies together, make sure you're using the most bullish type things, even if it means you trade less. We look for quality over quantity. So just think about that.
And I'm glad he said that because if you doubt the pattern that you're seeing, don't take the trade. You can move on to something else. But if there's a pattern that you're seeing and you're not really sure about it, then don't, you know what I mean? Don't take the trade.
I have a question. Could you guys explain the cup and handle? What exactly are you meaning by that? What is that definition? What does that mean?
So your cup, Ray, you want to go through that?
I actually don't use the cup and handle, but that's what Google for. You know what I'm saying? Boom.
And thanks for doing this on a Sunday, by the way. I appreciate it.
Look,
Learning about.
I'll say this in reference to the cup and handle. I have a video that goes over chart patterns, and like I was saying to him, it's an ugly cup and handle, but as you can see, it literally looks like a cup with a handle, and it is a bullish indicator. So you see that there is a point where the stock actually, at the beginning of the cup, you see that it starts to decline and round out, and it comes back up slightly lower than where the previous beginning point of the start of the cup formed. It goes down, and then it will proceed to go up. So it's a bullish indicator. But the cup and handle is one of the ones that oftentimes will fake you out. That's the reason why I called it a cup and scandal, because you kind of want a little bit more to confirm, because it will fake you out and reverse on you. So
Got it.
the pattern basically forming like a cup. But again, I have a video that I put into the community that goes over chart patterns. It's in
Got
my-
it. Thank you.
Yeah, and the recording will be posted like in the university tab.
Yeah.
Well, technically, yeah, it'll be on YouTube, but I think you need like a special link to go to it. But yeah, but also like think about this, because I'm not gonna sit up here and act like I know every pattern, especially off the top of my brain. If y'all ask me something I don't know, guess what I'm gonna do? Boom, this. If we can't think about it off top, you know what I'm saying? We're just gonna straight Google it, you know what I'm saying, and figure this thing out together. But I don't like to use stuff that usually might reverse. I only play like pennants and stuff like that. Is there a trading view for us?
I had
in
a
the
question.
Um,
Jay, I was curious, are you guys using the Greeks to make these your future plays as well? Or like the delta, the theta?
Absolutely. We're looking at the Greeks in reference to choosing contracts, but not necessarily in choosing the play, if that makes sense.
Okay.
Yeah,
Got it.
yeah,
I can go into it a little bit more for you.
the Greeks and stuff is in reference to picking
The contract.
contracts, but also like if you're swinging, like let's say you're swinging for a couple weeks or whatever, what I found is that the contract on the third Friday of every month tends to have the most volume and open interest. So if you're gonna swing for like a month or two or a couple weeks or whatever, pick like the third Friday if you can afford it, because that'll be like the most volume, and those usually are the best contracts. People are gonna want to buy them. So if it runs up one day and you want to sell into the momentum, you can sell it real quick because it's gonna be a lot of open interest and volume on it. For whatever reason, people love the third Friday. So that's a little trading hack for you.
Yeah. So
Appreciate it.
the gentleman that asked, just make sure that you're checking out the Greeks when you're picking your contracts, because that's when it's really, the most important, because it's going to show you how much money you're either gaining for each dollar move or losing day over day, of course, with theta decay and things like that. And again, in that channel that you guys love so much, Market Facts and Resources, there's a video on the Greeks in there, and it'll break it down very, very simply for you, because the Greeks can be complicated, but I think I did a pretty okay job of breaking it down in a simple format.
Hey Ray, I got one more question to ask you. You mentioned something about IBD.com. How exactly do you use that one to go ahead and look at different companies? If you don't mind explaining that real quick.
Well, the thing about IBD, I actually just found out about. I got one of my trader friends to ask me how they simplify looking at the fundamentals. But it's basically just a bunch of news on different companies, and they tend to put it in a format that's easy to understand. Which I don't even know why this is doing all this. Well, I'll always give you an explanation. So it isn't, I haven't actually got a chance to use it yet. I was actually gonna like look more into it this weekend, but I asked a friend like, how do they simplify their fundamental research? And they gave me IBD.com, and they gave me, let me see, what was the other one? Investors.com. So that's why I threw it out there. So IBD, and put it up here, investors.com. Because like you'll see like in this, and I mean obviously y'all kind of like see it in like options chat. This, it's easier when you use things like use other people and what they're good at. Fundamentals is not my thing. So I'm definitely gonna always ask, hey yo, how you so good at that, bro? What you using? You know what I'm saying? And boom. So that's how I came upon these two websites, because I don't have time to look for every website. So it's kind of easy when you pick other people's mind and see what they're using. And then you use what they're using. If it works for you, you keep it. If it don't work for you, you kind of like throw it away. You know what I'm saying? So I just wanted to give y'all the resources that was just given to me so that you can make better trades and stuff like that. Because fundamentals, I think I said that last time we was on here. Fundamentals is not my forte. I don't like reading a bunch of stuff. Like, I hate that. Explicit. I ain't gonna cuss.
I like it though. I like it. I like to look at price to book values. I need to know what the company is moving, what they're doing, and what direction they're going into to see if it's worth me putting my money into it. But I'm glad that you brought that question up, because I know a lot of you ask the company sentiment a lot in the community. Like, what do you think about this company? What do you think about this trade? And I tell a lot of you a lot of times, go to stocktwits.com. If you have not heard of that, please go to StockTwits, because it's going to give you everybody's sentiment. It's going to give you the bullish side, the bearish side, what people are doing, what people are seeing. And if you want to just get an overall sentiment, then you can go there. That is literally one of the platforms that's giving you the sentiment of a company. But like Ray said, he's not into fundamentals, and that right there goes to show that everybody is going to have their different trading styles. Some people just like to look at price action. Some people need indicators on their chart. Some people like fundamentals. Some people just look at, technicals for the day. I like to look at price to book value. It just depends on your style.
Sorry, quickly, sorry to interrupt, just a quick one. I'd really like to go over this video again. Where will it be so I can just go back to it when we're done?
12 Squad University.
Oh, inside, will there be a link inside there so we can watch the video again?
Absolutely.
Yes,
All right, thanks for that.
No problem. And if you guys don't have the link that gives you like a 4-step guide, if you're brand new, there is a trading guide in there, and it kind of welcomes you to the community, and it tells you what video to start watching, where to go to ask questions, where to go to look for certain things. I would highly recommend, just going and taking a look at that as well. The market facts and resources.
I have a question.
Wagwan.
So I live in Asia, so I have to literally be up 3-4 o'clock in the morning to look at the stock. So one time, like last week, there was a BABA option call, and I had, I went on Chris's expertise, but I fell asleep. I woke up and lost money. So can you like go over like when there's a call, when you're making calls, it's possible to make money as soon as you place them?
There are definitely a lot of trades that are out there where you can start to see, maybe a 5 to 10, sometimes a little bit more than that in a day. But what I would tell you is that if it's a trade that has a short expiration date on it, you can only play that type of game when you have a further out expiration date. Like I'm in a few contracts right now that may expire at the end of the year, or maybe in 2023. Those are the trades you can fall asleep on. But if it's something that is expiring like a weekly or a daily or something like that, you could reverse on you. So you want to make sure that you're watching those types of trades. I know people ask, can you full-time trade and have a full-time job? Yes, you can. But if you're full-time trading and you have a full-time job, you might want to look at contracts with further out expiration dates. That way you have time to recover and your losses are not so great and you're not being affected as much by data decay, if that makes sense.
Okay, yeah, that makes sense. And the stop loss, I seen somebody comment, yeah, that's one thing I've been having to do. I got to put my stop losses on them.
Absolutely. That'll help you too.
I have a question. When you guys are doing indicators, do you guys use the same indicators to do options calls versus like stock holds and buying shares?
They can be interchangeable. I can see them being interchangeable, but you
would use a much higher time frame.
If
you're trying to hold it. If they're trying to hold it, you would use a much higher time frame. Like you would look at like weekly, monthly. You know what I'm saying? If you're trying to hold the stock for a while, you would need to look at a higher time frame. Like if if you're trying to hold them. Now, if you're just trying to trade them like in like the same theory that you would options for, the price to go up and then you sell it. I mean, you can still look at daily, but it's basically the same thing for the most part, because options is waiting for the stock to go up. Well, if you're trading a stock and you want it to go up, it's the same thing, or whatever. You just don't have to worry about expiration dates and stuff.
Yeah.
Okay, and then a follow-up question with that. Like a lot of times you guys will put out a call and then, if you wait 2 or 3 minutes, a lot of times the entry price is like 10 to 15 cents different. So you obviously missed out on that call, but how do you know when you're entering your own call what a good entry price point is versus if it's too high already?
That's a very wide range question because, again, that's going to be contingent upon your particular trading style. For me, my entry is going to be 15 cents above a breakout. If I see that a particular key level has been broken and it is going in the direction for me to place a call, I might enter 15 cents above a breakout. I'm not going to chase it. I'm also going to look at the volatility on the contract. There's a lot of different things that go into play when it comes to picking that. However, if you are following from current option ideas and there's an average that's given, there, to me, and again, this is going to be on my particular risk management, but if that, let's say something was called out and I am entering 5 cents, which is essentially $5 more, then that may not be such a big deal to me. But if the stock has run up 40 cents, which is $40, maybe I don't want to take that trade. I might want to sit it out and wait for it to pull back, because 9 times out of 10, it might pull back unless it's, going parabolic. But I might want to wait for a pullback or a reversal in order to take the trade. And
Okay, that makes sense.
You can always bid too. You know what I mean? Like, you can set it and forget it. If there it's called out at an average of 90.95 or whatever the case, you can your bid in. You might even want to look at the low of the day. A lot of times that is very helpful. If you go and look at something that's called out and you see that the low of the day was even lower than it was called out, you might want to play between the two, and it might reverse back to the low of the day. You never know. It's contingent upon the move, the stock.
Okay. Thank you.
No problem.
But yeah, right now we're gonna go ahead and hard stop it and see y'all. I think the next one next week on the 31st. Yeah, next week. I guess right now we'll go back to our regular time. We're going back to 5, right? Well, yeah. Eastern your time, right? Okay, next week.
We'll put it into the community at the time, but yeah, we're setting for 5 o'clock Eastern Standard Time. But if there's anything that changes, we'll let you guys know. And we're still here if you have questions, ask your questions. Just be mindful that it is the weekend. And you also have market facts and resources. Thank you, Charles. Junior.
All right. Well, y'all have a blessed Sunday, or a highly favored, or whatever word rocks your boat. You know what I'm saying? You have one of those Sundays, and we'll catch you next time. We'll catch you in the chat or whatever. Be safe and stay positive.